Hey, what's up, everybody? Welcome to episode number 62. 62 here on season number 2. And today we are getting into what ETFs on stash pay monthly dividends. And I actually got to take these off. These are my wife's, but I'll use them as a microphone. So this question comes from Mzox210, like a long time ago, and he asked, is there any other ETFs on stash besides slow and steady that are monthly dividends? These videos are for educational purposes only and not meant to be taken as financial advice. You are responsible for your own assets and to protect those. So always make sure to do your own research. There's 5, from what I understand, that pay monthly dividends, and we'll go into each one real quick. I'll list them off, and then we'll go back through and talk about the monthly dividend and maybe a little bit more as well. So the 5 that pay monthly dividends are going to be the conservative mix, Park My Cash, Public Works, Slow and Steady, and then Uncle Sam. As far as the dividend for each of those ETFs, conservative mix pays a 2.19% dividend every year. Park My Cash pays a 1.57%. Public Works a 2.22%, a Slow and Steady with a 2.02%, and then Uncle Sam with a 1.62%. Out of all those 5, the top one is going to be Public Works that pays the highest dividend of a 2.22%. All these ETFs are going to be bond heavy, or specifically bond type ETFs. There's not very many equity ETFs that are going to pay you a monthly dividend. Most of those are going to be paid out quarterly. However, bond ETFs, even though they're slow moving, they add a lot of stability to a portfolio. So for instance, if your account is specifically all equities, you could be getting a lot more volatility than if you had some of your account exposed to bonds. And I think that this is why a lot of people are saying, make sure that you have some bonds in your account because of the volatility risk that involves. Most people don't like to see their account fluctuate a lot because we're emotional people, and so it's very hard when we start seeing our account go red, or we start seeing a 3% drop on the day or whatever. It's very hard for us to be like, okay, well, this is long-term focus. I'm going to pull myself out of it emotionally and only look at it logically. It's very hard for us to do that. So when we add bonds, we have less fluctuation, thus not as emotional. And so we can make more logical decisions about our investing experience, our investment journey, and so on and so forth. However, with that being said, adding or exposing yourself to bonds can potentially slow down the growth on the account as well, because it does limit the volatility, which means that there's not as high fluctuations. It's not as big of a roller coaster. It's going to be more stable across the board. When a stock or equity does run up because you're exposed to bonds, it's going to limit the way that it runs up. So for instance, if you are 80% exposed into equities and 20% exposed into bonds, you could potentially get a higher run than if you were 50% exposed to bonds and 50% exposed to equities. The problem and the issue that a lot of people are going to run into is what's the perfect balance between stocks versus equities. And there's tons of books out there that say you need to have 25% into bonds. There's going to be other books that say invest at your age into bonds. That's a pretty good number. Or there's going to be other books, even one that I'm reading right now, that's like, don't worry about bonds, only choose equities. What's the perfect medium? And that's honestly for you to decide. For me personally on stash, I'm looking at getting into 25% bonds on my account, and then from there leaving it set. My Acorns account, I'm going to be 40% into bonds, and then on my Robinhood account right now, I'm not even 5% into bonds. So for me, it's a perfect medium on each of those accounts, but altogether collectively, it's probably honestly about 30, maybe even less, 30% into, maybe even 25% into bonds. You need to decide what your risk level is and how much you need to put into bonds to basically limit the emotions that volatility will cause you to have. But we will leave it right there. Let's go ahead and dive into the question of the day, which was, what was the last photo you took? The last photo that I took was actually a photo of my friend's wedding. They just recently got married on Saturday, and so I snapped a quick picture of them cutting the cake or about to cut the cake, and so that was honestly the last picture that I remember taking. Like I always say, if you have any questions regarding Stash, Acorns, Robinhood, as well as general investing advice, business Etsy coaching, post those questions down below. Don't forget to subscribe up here and check out my Stash Recap February edition. Check out this other video right here. And as always, thank you for watching. I really appreciate it.